What's up traders, welcome to Failure to Displace. In this video we're going to take a look at today's New York AM session. I'm going to look at both Euro USD and essentially I'll show you why I didn't even entertain US 500. I took a small trade on Euro USD and was in good profits but ended up getting stopped out break even on that one. So let's run through the analysis and you can see how we ended up where we did. So today has obviously been very bullish again after CPI yesterday on the Wednesday, which was a huge pump up. Price has continued to work its way up. We've not really had any pullbacks. If you saw my video from earlier on today, you will have seen I did take a couple of losses in the London session, trying to trade this back down into yesterday's range. Coming into New York, price has essentially continued higher. However, there was a small opportunity in this area to take a short position, and let's run through that now. We'll jump onto the 1 minute time frame. I'm just going to scroll back to the session. And I'll just turn the analysis on so you can see what we have. So essentially, as the New York session opened up, we pulled up, took the London high, so that's this red line here. We had the news release at 8:30 this morning, so we had a bit of a whipsaw price action, and then price continued to go higher. We broke this high, which I was eyeing up, so we took some buy side liquidity at this point. Price did pull back, but it didn't break structure, so the break structure would have been here. We then put a new session high in at this point here. So this was the current high of the day. What made me take the trade that I did, which is this short trade here, was that at 10 AM, so a new candle opened, we had just swept buy side liquidity, closed back inside the range, so we were unable to displace above this big, large, engulfing candle. So it engulfed these three candles with its body. It broke structure, so we had a swing low here at the bottom of this fair value gap. So this bearish candle here has a higher candle to the left, higher candle to the right. So this is our swing low. So this was my break of structure. So we had a large engulfing candle. It created a small fair value gap here. The clincher for this for me was that this candle appeared at the beginning of the new hour. So this gave me confidence that we were going to get a pullback. Also here you'll see that this bearish candle that created the break of structure is also our breaker block now. So this is the last down closed candle before we swept the high. We closed straight through it, making this a breaker block. So in this example here, we've got a few levels of confluence. We've got a failure to displace above this high. So we can click that as our failure to displace. We just wicked it, closed back in at the beginning of a new hour. We have a breaker block that was traded through, leaving a fair value gap here. We can see price wicked into this, which is where I took my entry. Stop loss just above the high. So it was only a 2.8 pip stop loss. Using my risk management strategy, I went 50% of the position was taken off at 1-to-1. So that made me risk free. So how that works is obviously I had a $100 risk on this trade. When we got $100 in profit, I took $50 off. This means that I only had $50 left. So when price came back, the $50 profit I'd taken would cancel out the $50 loss that would ultimately occur if stop loss was hit. Now I was targeting, maybe too greedily, the optimal trade entry. So once I'd gone risk free, this was one of those days where I'd had two losses in the morning. So I took two small losses in the morning. I thought I'm not going to let myself mess this trade up. So I'm walking away from the computer and I'm just going to let it hit target now that I'm risk free. And my target was optimal trade entry, just under 50% of the range. So you can see here, this was our trading range. I was tagging optimal trade entry into this order block. We have liquidity just down here, so I was expecting to sweep that liquidity, go into optimal trade entry where I could close out for a really nice 6.5, which would more than make up for the two losses that I took this morning. Unfortunately, price didn't make it. So we got to the 382 fib. Now this is something to bear in mind, take notes of. You might have heard of this before or not, but in really bullish price action, the 382 can act as a support zone. which is what's happened here. So we didn't even get into a discount on this trade. It literally bounced on the 382, reversed, and took me out for a break-even trade, unfortunately. So this would have been a fantastic trade. If I'd have been at the computer, I'd have seen this and I'd have been closing out at this reaction. So there's a potential 4R there, but I really did expect us to get at least into a discount or come down to optimal trade entry, given the fact that we'd pumped up so hard from yesterday and continued to pump up. So my bias today has not really been on point. I've been expecting a pullback and it hasn't happened. You'd have been far better off just trading with the trend on this. But that was the entry that I took on EURUSD, based on a failure to displace above the new daily high, coming into a brand new hour open with this engulfment candle. So this is the kind of pattern that Stacey Burke refers to in Stacey Burke trading. It's not specifically ICT. This is more Stacey Burke's theories. Again, waiting for the hourly sessions or the hourly candles to open to bring in volume. When this happened, I essentially merged Stacey Burke's theory of the new candle opening with a big engulfment, and then ICT with a breaker block fair value gap, which is where I took my entry for the short, and should have closed out a little bit sooner. But I did want to make up for the loss that I'd taken on in the morning and thought that we'd at least come down into a discount. So unfortunately it didn't play out one of those days today. I'm going to jump over to US 500 just to show you why I didn't take any trades on US 500. Essentially looked at price action. We had the news, not a lot happened. The 9:30 open took place. This is where you would expect volume to come in, huge candles. It just fizzled out. So I was watching this coming into the silver bullet hour at 10 AM, looking at all of these gaps in price action, this consolidation. I mean, this is the kind of price action that you see on a bank holiday or a national holiday. It's just horrendous. So I just didn't want to get involved in that. There was no clear direction. I couldn't trade it, so I didn't even bother. ICT does say to us, after massive moves, such as what we had yesterday. So again, we had the volatile session in New York. ICT's own words are just to forget the AM session the following day, concentrate on the PM session. PM session today has offered us a nice trade. So we can see here that we have broken above the New York session high. This red line is the session high for the AM session. It includes lunchtime here, so that's the lunchtime high there. Coming into the PM session, price has pumped up. It's taken the high with displacement. So on 1 minute, we can see that we are displacing quite aggressively above that high. We have pulled back into some fair value gaps. This is the potential where you could be looking for a trade. We saw a break of structure once we tapped these fair value gaps in here. So this candle here is our break of structure, leaving fair value gaps and a breaker. So this this bullish candle, before we sweep these lows, once this is traded through, you would have normally expected that to act as a order block. It hasn't. We've traded straight through it and it reverses into a breaker block with fair value gaps around it. There's your entry, basically coming back into the breaker block or into this lower fair value gap if you want it to be really sharp on your entry. Targeting session highs. There was liquidity, which I have marked out just here. Now this is from days ago. This is something that I was eyeing up earlier on in the session, expecting that to get targeted. If we go back on the daily candles, let me just clean this up. To get that level of liquidity, you can see we have to go all the way back to April the 21st. Is that right? Yeah, 21st of April would be the draw on liquidity. Everything else, I mean, we are very high up in the range. So bullish. So that was the only liquidity point. So I was thinking that we could potentially be driving up to take this liquidity. And that would have been the opportunity to get in on the PM session and ultimately take that liquidity out again for our, you could potentially get on there. I'm going to be honest, I didn't trade this. I have taken my trades for the day. So I have quite strict rules on maximum of 3 trades because I don't want to get into over trading. Today has not gone to plan, so it'll be very, very easy to be not reading price action correctly, you know, having my brain in tilt. So I didn't trade this, but that's the setup that was available if you were interested in trading the PM session following ICT's rules after such a big push up yesterday on there. So I hope that was helpful, guys. It's been a bit of a tricky day today, but there has been a couple of really nice setups if you were on the right side of the market. If you like the video, please leave a thumbs up. If you have any questions, please drop them in the comments section down below. I'll be happy to try and help you out where I can. If you're enjoying the content and want to see more market reviews and insights into ICT concepts, consider subscribing. Thanks very much, and I'll see you in the next video.